This is the IUX Education Podcast, your shortcut to smarter trading and investing.
Where complex markets become simple. Let's dive in.
Welcome to the Deep Dive, the show where we really try to extract the most impactful insights from the information you share with us. Today, we're plunging into a truly legendary story from the world of finance. It's about an individual whose journey, well, it transformed a modest sum into an astronomical fortune through really sheer will and an unparalleled understanding of market dynamics. Get ready to explore the methods and mindset of Takashi Kotegawa, famously known as BNF, the day trading legend.
Yeah, and when we talk about legends, Kotegawa's story, it really does stand apart. I mean, imagine starting with approximately $13,000, literally his life savings at the time, and then in just a few short years, turning that into well over $100 million. The sheer scale of that transformation is almost unfathomable for many people.
Absolutely incredible, isn't it? And what makes this story so much more than just the numbers is the how. You know, this wasn't the result of a lucky inheritance or some venture capital windfall or even a single speculative big bet. It was achieved through incredibly disciplined, persistent day trading. That's why he earned that powerful moniker, the day trading legend.
It really is. It's a testament to the power of consistent, methodical application, building gains incrementally in a way that most people only dream of and, in an environment where most actually fail.
So our mission today is pretty clear. We're going to dive deep into Kotegawa's approach. We'll try to extract the core mindset and the precise strategies that allowed him to achieve such extraordinary success. This deep dive is designed to give you a shortcut to understanding what made him truly unique, delivering those aha moments and maybe some surprising facts without, all the typical information overload.
And as we unpack his journey, I want you, the listener, to maybe consider something beyond just the trading screen. Think about what principles from Kotegawa's seemingly niche approach might actually be applicable far beyond the financial markets. How his unwavering focus and ironclad discipline could translate to any field requiring intense concentration, meticulous analysis, and just unwavering commitment.
Okay, sounds good. Let's unpack this incredible journey then. So when we first hear about someone achieving such, phenomenal success, it's natural to wonder about their origins, right? Was Kotegawa some kind of child prodigy, maybe a math savant who just emerged from Tokyo's financial districts with this innate understanding of algorithms and market movements?
Well, what's fascinating here is that his story is actually far from that archetype. Takashi Kotegawa, known to the online trading community as BNF, he actually began his journey as a completely regular young man in Japan. There was no silver spoon, no connections to a wealthy family, no, intricate network of insider contacts. He was, by all accounts, a pretty ordinary individual who simply developed an extraordinary ability.
And what actually sparked his interest in the markets, it was deeply personal, wasn't it? Even painful. He apparently started delving into trading after observing his own parents experience significant financial losses during the infamous .com bubble burst. That experience, that sort of sense of vulnerability in the face of market volatility, it really triggered something profound within him. It wasn't just curiosity. It was like a strong drive to understand and perhaps protect.
Yes, absolutely, and definitely lit a fire. He felt compelled to understand it, to truly grasp how markets operate beneath the surface, beyond the headlines and the hype. So instead of pursuing formal education in finance or seeking out professional mentors, he embarked on this intense period of self-study. And we're talking hardcore, every single day, poring over charts, financial reports, market data. He had no formal training, no Wall Street background whatsoever. It was pure, unadulterated dedication to understanding market mechanics.
And think about the starting point. He began with just 1.6 million yen. That was literally his life savings at the time, which, for context, translated to about, 13,000 US dollars. With a relatively modest sum, he simply sat in front of a computer day after day, quietly, persistently executing his trades. There was no fanfare, no grand pronouncements, just relentless application of what he was learning.
And this is where his story truly diverges from the typical narrative of an overnight success. It wasn't about hitting the jackpot on one trade. It was about building wealth methodically, consistently. He wasn't seeking fame or recognition. He was seeking mastery and, consistent returns.
Now, here's where things get really interesting and where we start to see the foundational pillars of his success. Kotegawa didn't operate on gut feelings or high-stakes gambling, which is often the image people have of a day trader. Quite the opposite, in fact. His trades were incredibly disciplined, meticulously calculated, and deeply rooted in his own thorough analysis of market mechanics.
Yeah, and it raises an important question for many people, right? How do you genuinely turn $13,000 into well over $100 million by being disciplined? That sounds counterintuitive to the image of the high-flying, risk-taking trader, doesn't it? Most people associate big wins with big, audacious bets.
And that, precisely, is the magic, the core of his approach. He firmly believed in accumulating small, consistent wins. His strategy centered on precisely identifying what he called oversold stocks, meaning companies whose share prices had dropped excessively, often due to temporary panic or, an overreaction in the market. He specifically looked for those that had deviated significantly from their moving averages. These averages, for those less familiar, are lines on a chart that smooth out price data over time, helping to identify trends and potential reversals. So his method was about exploiting predictable market overreactions. When prices dive excessively, they often present a higher probability for a bounce back towards their perceived true value. It's the concept known as reversion to the mean. He wasn't chasing that one massive life-changing trade. He was building wealth incrementally, one disciplined decision at a time.
So if we connect this to the bigger picture, he was essentially the anti-lottery ticket trader. He wasn't hoping for a miracle. He was creating consistent opportunities through rigorous quantitative analysis. He understood that market behavior, while chaotic at times, also presents patterns for those patient enough to find them.
Exactly. And coupled with that, he possessed this almost unbelievable ability to sit on his hands, as traders say. What that means is he would wait with immense patience for the absolute perfect setup. He only struck when every single factor lined up precisely with his predefined criteria.
Oh.
There were no impulse trades, no chasing momentum just because everyone else seemed to be doing it. He had his system, and he adhered to it with remarkable stoicism.
So yeah, we can kind of distill it down to a powerful trinity for him. Unwavering patience in waiting for the right moment, astute pattern recognition derived from countless hours of study, and an exceptionally strict approach to risk control. Knowing when to cut losses quickly and protect capital, these weren't just theoretical concepts for him. They were the bedrock of his daily operations, ingrained into every single decision.
Okay, so we've talked about his beginnings and his core philosophy, but every legend has that one pivotal moment, right? That one big story that truly cements their place in history. The moment where their unique abilities are put to the ultimate test and, well, shine through.
Oh, absolutely. And for Kotegawa, it's one of the most famous and frankly astounding stories in modern trading history. It's widely known as the JCOM incident, and it unfolded back in 2005 on the Tokyo Stock Exchange.
The JCOM incident. Okay. What exactly happened to make it so legendary, and what role did Kotegawa play?
Well, it was a classic example of a fat finger error. A simple human error in inputting a trade, but with catastrophic consequences for a major firm. A junior trader at Mizuho Securities, a prominent financial institution, intended to sell just one share of a newly listed recruitment company called JCOM. The price they intended to sell it at was 610,000 yen, which, to give you a sense of scale, was about $5,000 back then.
Wait, hold on. So they meant to sell one share for 610,000, which was about $5,000, right? Okay. And what happened instead?
Exactly. But instead of that, in a truly unbelievable human error, they mistakenly input an order to sell 610,000 shares for just 1 yen each. Imagine the difference. 1 yen. It wasn't just a typo. It was an order that implied a market capitalization of practically nothing for a company that was, worth billions.
No way. That's not just a mistake. That's an absolute cataclysm for a trading firm. I mean, imagine the panic, the sheer chaos that must have erupted on the trading floor. How quickly did the market react to something like that?
Absolute chaos is right. The market was just reeling as this erroneous order instantly flooded the system. Brokers, algorithms, everyone was scrambling to understand what was happening, leading to extreme volatility and, illiquidity in JCOM stock. But here's the thing. While everyone else was either panicking, confused, or trying to fix the mistake, Kotegawa BNF saw the error instantly. He understood with crystal clarity that this wasn't just a random mistake, it was a once-in-a-lifetime opportunity. He grasped the market mechanics, the temporary dislocation caused by this single, massive, incorrect order. And without hesitation, demonstrating incredible mental clarity and decisive action, he bought up an immense number of those mispriced shares, all within a matter of minutes.
Oh, wow. Okay, then?
Yeah.
What happened next once he had acquired these shares at, practically zero cost?
He then sold them for a massive profit later that very same day, once the mistake was partially rectified by the exchange and Mizuho, and the market for JCOM shares recovered somewhat. In just this single incredible event, he personally netted around $20 million. That's the trade that didn't just put him on the map in Japan, but really solidified his reputation globally. And, to prove that this wasn't some fluke, that it truly was his understanding and methodology at play, think about his performance during the chaos of the 2008 global financial crisis. While many investors were losing fortunes, he actually made even more money by strategically buying the dip in major Japanese companies, basically. Purchasing assets after a significant price drop, anticipating a recovery. He thrived where others floundered, demonstrating that his success was rooted in analytical prowess, not just luck.
Okay, so this is the $1 million or maybe the $100 million question for anyone listening. Why did he succeed so spectacularly when so many other day traders, despite their best efforts, often fail or just don't achieve anything close to this level of consistent, compounding success? What was his secret sauce, if we can call it that?
That is the crucial question, isn't it? And it's the core insight we need to unpack. I believe there are 3 absolutely crucial reasons that stand out when we look at his journey. First, unshakable discipline. And this wasn't just a buzzword for him, it was a daily practice. He never chased trades out of greed or panic or, fear of missing out. FOMO wasn't in his vocabulary, it seems. He waited for rock-solid confirmation signals. He stuck rigorously to his predefined system for entry and exit points. And perhaps most importantly, he never allowed emotions to dictate his decisions. He operated like a machine of logic, adhering to his rules even when his instincts might have screamed otherwise. This meant cutting losses quickly and letting winners run regardless of how he felt about a stock.
It sounds almost inhuman, doesn't it? Just pure, calm, methodical execution, kind of devoid of the emotional roller coaster that most people experience in high-stakes situations.
Okay.
What was the second key reason?
The second reason was his extreme focus. And I really mean extreme. He quite literally avoided distractions. He famously kept himself away from news reports, which, let's be honest, can often lead to emotional reactive trading based on headlines rather than the underlying market data. He immersed himself completely in his charts, the raw price action, the order books. He even stated that his life revolved around deeply studying market movements, foregoing social outings and dates to dedicate himself entirely to his craft. For him, pretty much every waking moment was an opportunity to refine his understanding of how the market truly functioned.
So dedication or obsession sounds like a fine line there, maybe, but undeniably effective in his case. And the third, equally vital reason.
Yeah, the third was his relentless willingness to learn from every single mistake. He didn't just trade, he was a meticulous record keeper. He diligently maintained detailed records of what strategies worked, which specific setups were most profitable, and just as importantly, what didn't work. This constant iterative process of self-correction allowed him to continuously refine and optimize his approach. He never stopped learning from the market itself, viewing every losing trade not as a failure, but as valuable data to be analyzed and incorporated into his evolving system.
Yeah.
Precisely. So his success wasn't really about some innate God-given genius that allowed him to predict the future. It was fundamentally about his process. A combination of rigorous analysis, strict adherence to rules, total immersion, and an unyielding commitment to continuous improvement. Over and over again, he reinforced a successful methodology through pure, consistent, unwavering execution.
So as we wrap up this deep dive, let's briefly summarize the profound insights from Takashi Kotegawa's extraordinary success that we've unpacked today. It wasn't about a magic formula, but really about 3 core principles. His unshakable discipline in adhering to his rules, his extreme focus on the raw market data, and his relentless willingness to learn from every single mistake. It really does reinforce that his path was about perfecting a systematic process, not relying on some unattainable inborn genius.
Exactly. And if we connect this to the bigger picture, that JCOM incident, it stands as such a powerful testament to his truly unique ability to spot opportunities amidst utter chaos. It wasn't merely luck, it was driven by his profound understanding of market mechanics, his ability to filter out noise, and his capacity for swift, decisive action when the moment demanded it. Kotegawa's story isn't just about making money, it's a powerful illustration of critical thinking, emotional control, and the power of methodical preparation in incredibly high-stakes environments.
So what does this all mean for you listening right now? Its extreme focus and unwavering discipline, coupled with continuous learning, can lead to such extraordinary results in something as volatile and demanding as day trading. Well, just imagine what the consistent application of these very same principles could unlock in your own pursuits, whatever they may be. Whether you're learning a new skill, managing a complex project, or charting your career path, the principles of process over genius seem universally applicable.
Yeah, and this raises an important question, I think. In a world absolutely full of distractions and the constant allure of quick fix promises, where might you strategically apply Kotegawa's philosophy of process over genius to achieve your own remarkable breakthroughs? Consider where you might implement more discipline, more focus, or perhaps a more rigorous learning cycle. It's definitely a powerful thought to carry forward.
Exactly. Thank you for joining us on The Deep Dive. We hope this conversation sparks your own curiosity and encourages you to continue exploring and applying these profound insights in your own life. Until next time, keep diving deep.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.